Hello and welcome to Nitsevny. We've got another video with some great information for you, so make sure to watch till the end and subscribe to this channel. As an investor, are you able to clearly define your risk tolerance? If your answer is no, you're not alone. An important part of the financial planning process is understanding and defining the ability to tolerate the risks inherent in investing. Determining risk tolerance is critical when customizing an investment strategy that meets the needs of each individual. What is risk tolerance? Risk tolerance is a measure of willingness to accept higher risk or volatility in exchange for higher potential returns. It is not a factor that is permanently determined and then left unevaluated for many years. Risk tolerance is likely to change with age, income, knowledge, marital status, and other important life events such as buying a home, paying for college, or retiring. Let me tell you, risk profiling helps you invest in the optimum and diversified asset allocation to reach your investment goals. It also aims to simplify the process of understanding your underlying attitudes toward investing, and hence predicting your probable reactions to future events. It's an important part of the financial planning process. All types of investments require that you take on some degree of risk. Cash, for example, carries an inflationary risk. Property carries the risk of not being occupied, and equities the risk of capital loss through corporate failure or devastating economic factors. Each individual has a certain pain threshold, and this holds true with investing. Your risk tolerance is the point at which you can no longer take a stock market downturn and move your money into cash. We all have a tipping point, and it's important to find it. Keep in mind that this is an emotional behavior and not your capacity for risk. Let me explain. Capacity for risk is your financial capacity to withstand market losses. For example, if you're a high net worth individual living with modest means, then you would have a high capacity for risk during a market downturn. This means you would have enough assets to live off of during this time period. Your risk tolerance during this period would be how you slept at night, and thus an emotional behavior. Okay, stay with me here. Risk tolerance is an important concept because your behavior will help determine what kind of returns you'll get. The worst thing you could do is build a portfolio of all equities 100% invested in stocks when your tolerance for risk is half that. Essentially, you would have sold during a downturn, hampering any gains you might have had. If you had a portfolio of half equities and half fixed income bonds and cash, then you might have stayed in the market and reaped the benefits of a market rebound. You may have said to yourself, "I'm a better investor than that," and would have held strong. Well, we all have short-term memories, but during the time from October 2008 to about mid-March of 2009, many people were saying the sky was falling, and it felt like it too. As investors, sometimes we allow our emotions to get the best of us. Dalbar Incorporated is a company that compares investors' market returns versus the S&P 500 index. For the last 20 years ending in 2012, the S&P 500 had a return of 8.21%, while the average equity investor earned a return of only 4.25%. For many of us, the market can trigger a fight or flight response, so you must decide how comfortable you can sleep at night during your worst-case scenario. Remember, your risk tolerance isn't always easy to see. However, understanding one's personal aversion to risk at different stages of the investment journey will help you stay within your comfort zone. It also helps you avoid what one would view as unacceptable losses. As always, even moderate and low-risk investments carry some risks. However, if you stick with tried and true models and have the time and patience to wait out market fluctuations along the way, these are typically safer investments to make. You just have to research, learn, understand, and implement your best strategies of risk tolerance. That's it. Now you know the importance of risk tolerance. What did you think of this video? Let us know in the comments section. And if you liked this video, then don't forget to hit the thumbs up and subscribe to this channel for more amazing videos. Also, hit the bell icon to get notified first and share it with your investor friends. Thanks for watching. We'll see you in the next one with another informative topic.